Hello. Again, we are now on Module 2 with auditing and assurance, concepts and applications. No? We are going to deal with transaction cycles, substantive tests of cash and cash equivalent. So we got 12 learning objectives which should a student able to describe the different categories of transaction cycles. You are going to identify the forms or the documents used in different departments. Identify and describes the functions and departments in each transaction cycles. Identifying possible controls in each transaction cycles. Identifying what items are included in cash and cash equivalents, calculate correct balance of petty cash fund, identify bank and book reconciling items, prepare a bank reconciliation and proof of cash, explain and identify the categories of management assertions, identifying the audit objectives of cash and cash equivalents, describe the primary substantive audit procedures for cash and cash equivalents, and identifying assertions addressed to audit procedure for cash and cash equivalents. The module will be divided into 3, which are: number 1 is transaction cycle, second, substantive test of cash, and the last one is what is the composition of cash and cash equivalent. Then, what do you mean by transaction cycles? This means through which an accounting system processes transactions of related activities such as a sale of goods to customer, the acquisition of merchandise, payments to vendors, production of finished products or sale, and payment to employees for services they had rendered. A transaction is an agreement between two entities to exchange goods or services or any other event that can be measured in economic terms by an organization. The revenue and receipts, purchase to pay, production cycle discussed in this chapter is primarily for a manufacturing entity. In addition, the discussions under the financing cycle is primarily for a corporation. However, a payroll cycle and investing cycle can be applicable to all entities. Furthermore, internal controls discussed in this normally applicable in a manual process setup, which may significantly vary in an automated setup. The categories of transaction cycles. This can be categorized into 5 interrelated major cycles. We have the revenue and receipts, inclusions of sale of goods and services to customer and collections of costs. We got expenditure and disbursement, the acquisition of goods and services, the payment for the goods and services acquired. We have human resource and payroll, acquisition of services from employees and payment for the services acquired, the production or conversion, production of entities' product for sale, and financing and investing, generation of capital funds from outside vendors, and investment of capital funds to other profitable activities. These are the interrelated major cycles. Then we have business revenue and receipt cycle order to cash is we have business function. The major business functions are: resources are distributed to customers in exchange for a promise of future payments, and customer may pay cash for resources distributed to them. Account affected. Affected accounts are sales and related sales return allowances and discounts, the receivable, the allowance for bad debts and bad debts expense, and a cash. And department involved, significant departments affecting the cycles are the revenue. We have sales or customer order, credit, inventory controls or warehouse, shipping, billing, accounting, inventory, receivables, and general. We got the receipts, accounting, We have mailroom and receptionist, treasury, accounting. We have the receivable and general. The forms and documents received and initiated and processed. These are the forms. We have the description, the initiated by and distributed by. So for sales order, order slip or customer order contains the details of goods I've ordered, the quality, the price, and payment terms. We have the sales department and distributed to customer, credit, shipping, billing. And another is shipping document or the bill of lading or delivery receipts, landing. So describes the goods to be shipped and serve as contract between the entity and the carrier. We have the shipping department and we have the carrier, the customers, and the billing. The sales invoice again is the billing statement. Describes the goods amount due and the terms of payment. The billing department is in charge, and the customer and accounting are the one who with detailed paper or documents. Remittance advice. A document is sent by a customer to a seller, informing the seller that their invoice had been paid. So it would be initiated by customer through mailroom and department, and usually it is received or distributed by general accounting and receivable department. We got summaries, daily summaries. Summaries of transaction recorded during the day by the different departments. Receivable for sales, treasury for collection, mailroom for mail receive. It would be distributed to general accounting and treasury and receivable. Important notes to form or documents process. The department that initiated the processing approves the form. The department that initiated the processing is accountable for a news form. Also, access to those forms shall be limited to the said department. So, these are the unused forms should be kept and inventoried at the end of the period. The notification of forms does not necessarily mean a hard copy shall be forwarded. Can be through electronic mail also. The department that initiated, received, process a form shall retain the copy for filing. Summary functions of departments in the revenue cycles. We got the sales department. Objective is to increase entity sales. The activities are locates and encourages buyer, negotiates terms with buyers, accept customers' order, prepare sales order and distributed copies to customer, credit, shipping, and billing, retains copy in unfilled order file, monitors the status of the order, updates customer as to the status of the order. Now, the possible control for this are the common control adopted in this department includes sales department has an exclusive function to communicate with the customer. Second, entities maintains a list of authorized customer to minimize exposure to high-risk customer. And entity maintains range of selling prices for its product. So these are the activities and the possible control in sales department. Then credit department. The objective is to minimize exposure to high-risk customer. Now, activities are receives and reviews sales order from sales department, conduct credit investigation, approves credit request by preparing a memo or placing an approved mark in the sales order, notifies sales department as to the approval, disapproval of credit requests, and forwards the approved sales order to inventory control. The possible controls are the entities establish a credit department that is independent with the sales department. The credit department issue lists of authorized customer. This is the control on to minimize the unauthorized approval of the sales. Then we go now to inventory control department. What is the objective? To control transfer of inventory in and out of storage area, monitors inventory levels, and report slow moving or damaged items. The activities are review approved sales order received from credit department, monitors the availability of goods ordered, authorize the issuance of goods to shipping department, and forwards the approved sales order to shipping department. What are some possible controls? The inventory control that provides access to sales department to inventory level, and different inventory management concepts which are applied to provide reasonable assurance the availability of goods when needed. In shipping department, the primary objective is to provide reasonable assurance that all shipments are authorized. So the activities here are compare sales order from sales department with goods and approved sales order from inventory control. So there should be a comparison. Compete shipping documents and prepares goods shipment. Release goods to carrier and obtains receipts. Notifies sales department that goods have been shipped. Forwards the shipping documents and approves sales order to billing department. Possible controls are shipping documents that are pre-numbered and accounted for. Pre-numbered, no? Ensures related billings are made on periodic basis. Then we go now on the billing department. It's to provide a reasonable assurance that all shipments are billed. Now, the activities here is you have to compare the following documents. Sales order from sales department, approved sales order, and shipping documents from shipping department. And then prepare sales invoice and send copies to customer through carrier or through inventory accounting. The possible controls are pre-numbered sales invoice, that's very important. Shipping documents must be present before preparations of sales invoice. So take note of the sequence. Accounting department, inventory, provides cost information on the goods sold to be forwarded to general accounting and records transaction related to cost of goods sold. General records the sale and forward sales invoice and related documents to accounts receivable. For accounts receivable, update subsidiary ledgers related to customers' account. The summary functions of departments in the receipt cycle collections. A. We have the mail receptionist. Receives remittances, advice and customer checks from customers. Prepares list of receipts. Endorses checks and list of receipts to Treasury Department. Endorses remittances advice and list of receipts to Accounts Receivable Department. We're gonna B Treasurer Department. We updates cash records, prepares deposit slips, prepares collection summaries, send copy to accounts receivable and general accounting, and retains a copy. And then deposits collection to the bank. And then accounting department, we got accounts receivable. There will be comparison with the remittances advice from mail order and cash summaries from treasury. Update subsidiary ledgers. Prepare daily summaries to be forwarded to general accounting. General compares daily summaries from treasury and accounts receivable, then updates general ledger. Other activities in the revenue and receipt cycles, we got the uncollectible accounts. So, you have to review individual customer accounts periodically and compare against credit limits. You have to prepare monthly accounts receivable trial balances for reconciliation with the general ledger. We got to authorize personnel independent of credit department to review and edge account receivable balances periodically. Authorize personnel who reports to the treasurer and independent of recording functions or treasurer to authorize the write-off. In case of delinquent accounts, such accounts should be reviewed. If judged to be uncollectible, written authorization to write off should be sent to accounts receivable and general accounting. Sales returns and allowances. This is under the sales department. You are going to review customer requests for returns and allowances, grant sales returns and allowances, and prepares credit memo which is forwarded to customer, accounts receivable for recording, and inventory control for returns. The receiving department will receive returned goods and prepare a receiving report. In the inventory, compares goods received through the receiving department and credit memo. In accounting, the inventory updates inventory records based on receiving reports and prepare daily summaries to be forwarded for general accounting. And for accounts receivable, you have to update records based on credit memo receipts and prepares daily summaries to be forwarded to general accounting. In general, compares all daily summaries from inventory, accounts receivable, then updates their general ledger. Purchase to pay. So, we have now the business functions. The two major functions are resources are acquired from vendors in exchange of obligation to pay. The entity pays cash to vendors and employees. Accounts affected, we have purchases, purchase return allowances and discounts, the payables, and cash. The departments involved are expenditure, the user, purchasing or procurement, receiving, accounting for vouchers payable, accounting for inventory and general. For disbursement, we have the treasury and accounting receivable and general. So that is purchase to pay. The forms or document received initiate and process. So forms, we have the requisition slip or purchase requisition. So it contains the detail of the user's department requests initiated by user's department and then distributed by purchasing. The purchase order describes the goods to be acquired, quantity and description. We have the purchasing department and then distributed to vendor, user, receiving, accounts payable. The receiving report describes the goods received, the quantity description and condition. We got the receiving department, the purchasing, and the accounts payable are the one in charge for the paper. The shipping documents describes the goods to be shipped and serve as contract between the vendor and the carrier. We have the vendor through the carrier, and this is on the distributed by receiving department. Vendor invoice describes the goods and sold amount due and the terms of payment. We have the vendors and we have the accounts payable. The remittance advice document sent by the entity to seller informing the seller that their invoice has been paid. We have the treasury and we have the vendor. Daily summaries summarize transactions recorded during the day by different department. We got the accounts payable for purchases, treasury for payment, general accounting is the distribution area. Summaries on functions of process cycle. Users department prepares requisition slip forwarded to purchasing and accounts payable department. The purchasing or procurement department to meet the specific needs of the user department at the least possible cost. What are the activities involved here? It receives approved requisition slip from the user's department, locates vendors and negotiates with terms, prepares purchase order and distributed copies to vendors, users, receiving, and accounts payable, monitors the status of the order, updates customer as to the status of the order. What are the possible control of this? The purchasing department has an exclusive function to communicate with the vendor. The entities maintains list of authorized vendors. Entity compares purchase price and market price. A receiving department primary objective to provide reasonable assurance that received goods are based on approved purchase order. So what are the activities here? Files purchase orders until goods are received. Upon receipts, counts and check the goods for appropriate quantity and condition. Review and compare purchase order and shipping document from the carrier. Prepare receiving report to be forwarded to purchasing and accounts payable accompanied by a purchase order from purchasing and shipping documents from the carrier. The possible control for this is to ensure that the receiving department will count and check the goods received and the purchasing department sends a blank purchase order. Accounts or voucher payable department is primary objective is to provide reasonable assurance that payments will be made to shipment receipts. So activities are review and compare purchase order, receiving report, and vendor's invoice. A three-way match. So you have to vouch or you have to compare. Prepare vouchers package. We have the requisition slip, purchase order, receiving report, vendor's invoice and vouchers, and daily summary to be forwarded to the treasury and general accounting respectively. The possible common controls for this is voucher should be supported by purchase order, receiving report, and supplier sales invoice or any other supporting documents. Accounts payable department files vouchers package by due dates so as to pay liability on time and take advantage of discount if any. So these are the possible control of these activities. The Treasury Department or the disbursement, the activities here are review voucher package receipts, prepares checks and have it signed by authorized signatories, forward checks and remittances to advice to vendors, and prepare daily summary which is to be forwarded to general accounting. The possible control for this is the person last signing the check cancels the voucher package by placing a mark paid cancel, writing the check number. So, entity may accept any of the following in relation to issuance of checks. Checks over a certain amount should have an identifiable payee. No check shall be issued without an identified payee, or checks to be signed by at least 2 authorized persons. These are the control for checks, no? And then we go now to human resources and payroll cycle. Human resource and payroll cycle are part of the expenditures and disbursement cycle. This cycle covers the entity's acquisitions of services from its employees or personnel. The following are main reasons why the auditor is concerned by this cycle. First, payroll include different categories of employees' benefit, short-term, post-employment, and other long-term and retirement. They could significantly affect major elements of financial statement, and most entities significant amount of resources is incurred. So business functions, the two major business functions are services are received from employees in exchange for obligation to pay. The entity pays cash to employees. Accounts affected, the accounts affected includes but not limited to the following: salaries and wages and expenses and payable, premium expense and payable, withholding tax payable, inventory such inventory, salaries, wages, and cash. The development involves where have significant department affecting the cycle are expenditure, the users, any department within entity, human resource or personnel, the payroll, accounting, inventory, and general, disbursement and distribution, the treasury, and accounting in general. The forms and document received, initiated, and processed. Forms, it's our record for record of 2015. So it contains all information related to entities, employees from time they are hired to their eventual termination if documents or actions taken by the employers or management on behalf of the employee. Commonly, it also documents salary rates, deductions, and other payroll-related information. It is initiated by HR department and distributed to payroll. Payroll is limited to payroll-related information only. The DTR or the daily time record describes the number of hours worked by an employee during a particular day covered by a pay period. Users department, and we have the payroll. The payroll register shows all related payroll information. The gross pay, all deduction, and net of each salary, each period. We have the payroll and the treasury and general accounting. Labor cost summary shows payroll information which is capitalizable or can be attributed to a particular job or customer order. So we have the payroll and we have the inventory accounting. Employees' earnings record shows the cumulative year-to-date summary of earnings and deductions of each employee. Again, the payroll and the account payable. Daily summaries. Summaries transaction recorded during the day by the different department. We have the payroll for liability, inventory for inventory's labor costs, and then treasury for payment. We got the general accounting who distributed. Then we go now to the summary functions of departments in human resource and payroll department. So we have A, users department. The objective is to ensure that time record prepared by employees represent actual hours worked during the pay period. The activities is to monitor and approve daily time record. Note, however, due to introduction of computerized human resource system, time period records are commonly tracked through biometrics and access device. The possible control is appropriate review activities shall be made to ensure the validity of daily time records prepared by employees. In case of computerized system, approval of any inceptions shall be made by the user's department head. The HR department ensure employees included in the payroll are rendering service to the entity. So we got the activities, initiate, updates, maintains HR record, forwards payroll-related information to payroll department. We example the salary, the wages rate, bonuses, overtime, and payroll deductions. Determine the terms of settlement, lump sum or installment in case of termination to employees, and immediate notify payroll department of terminated employees to avoid inclusion of these employees in the subsequent payroll calculation. Controls are access, including initiating change to HR record, shall be remitted only to the HR department. Information not relevant to payroll calculation should not be shared to other departments. The payroll department provides reasonable assurance that the payroll calculation in every pay period is valid. The activities that should be done are receive and review relevant payroll-related information from HR and the users department. Considers may update on employees' pay rates and deduction, prepares payroll register, updates cumulative employee earnings record, identifies and submit the inventory accounting capitalizable period in case of servicing and manufacturing companies with inventorable labor costs. Common controls, appropriate level of management, preferably a member who is not involved in payroll preparation, review the payroll register for accuracy and reasonableness. To ensure adequacy of segregations of duties, the payroll department should be segregated from HR Treasury, and other users department. The Treasury Department or the disbursement provides reasonable assurance that all payroll disbursement are based on actual services rendered by employees. So activities here are review payroll registered receipt, preparing check and have in signed by authorized signatories, distribute checks to employees, prepare daily summary which is to be forwarded to general accounting. You have to note down, most companies disburse payroll through banks. Funds transferred from company's payroll fund to individual employees' payroll account. In this case, the Treasury Department should be the one authorizing the bank transfer. So, importante yun. Then, the possible controls are separate bank accounts should be maintained exclusively for payroll disbursement. So, there is a separate account. On a surprise basis, an employee-dependent payroll and user department from payroll and user departments may distribute paychecks. The purpose of this is to identify whether or not fixed issues employees exist and claim payroll checks shall be deposited to the bank. Accounting Department. The primary objective to provide reasonable assurance that items related to payroll are appropriately classified and recorded in correct accounting period at appropriate amounts. The inventory records inventorable labor costs to appropriate jobs or customer accounts and forward a daily summary to general accounting. General reviews all summaries, documents received from payroll, treasury, inventory, department, and records the recognition of payroll-related expenses and liabilities in the general journal. Production or conversion cycle. Production or conversion cycle covers the production of entities' product for sale. It is where material, labors, overhead are converted into finished goods. The primary objective of this cycle is to the proper valuation of inventory. Such objective encompasses the allocations of costs to each run made by the production department. In order to maintain this, the production department uses inputs from the expenditures and disbursement cycles and provide resources and information to revenue and receipt cycle. In details of the process used in this cycle, it is discussed in your cost accounting course. Its focus note may be purely on control over the custody of resources involved, authorizations of the activities, and recording of transactions. So, as to substantive tests, we got in Chapter 11, we have summary of control-related duties and responsibilities. So, custody, assigned person to perform the functions. The physical custody of materials and labor documents is normally held by the production department. Since most of the assets here are highly susceptible to misappropriate, adequate physical control must be implemented. The auditor observes physical count and reconciling the resorts on such count to entities record. If held by other parties, auditor may send confirmation requests to the custodian and example consigning agent or a branch. So this is now the procedure performance by an auditor. For authorization, the introduction to department is authorized to make normal production run. However, in the case of a special run, to meet a special order, authorization must come from Board of Director or its authorized representative. The auditor reviews revenue orders, production orders, and related documents supporting production run made by the department to determine whether it bears the necessary authorization. So you cannot make special orders or special runs if there is no board resolutions authorizing whoever be the representative of that orders, special. Then recording, transactions are recorded by the cost accounting. Daily summaries are then prepared and forwarded to general accounting for recording and posting in the general journal and ledger, respectively. The auditor normally reviews competency of the individuals making journal entries and reconciliations of the general ledger. Important notes. In case of settlement of equity and department securities previously issued, the certificate is cancelled through perform. The certificate was shredded. The purpose of this is to avoid duplicate payments. The supporting records and documents are then kept as audit trail for transaction. In case of department instrument, general accounting shall appropriately monitors any accruing interest from the liabilities. We go now to next cycle, the investment cycle. What are the duties and responsibilities? We have the custody, authorization, and in the custody, it negotiates certificate, brokerage accounts, titles to real estate may be kept in a safe with the entity or bank safe deposits. The procedures performed by auditor are inquiries directly to assign custodian through sending of confirmation requests. If held internally, the auditor observes the accounting for certificates held. Authorization, as previously mentioned, transaction covered in this cycle involves large amount of cash and other resources. With this, transactions should be approved by the board of directors or by any investment committee of the board. Auditors review minutes of the board of directors meeting in order to check if there is a proper authorization and proper accountability. Then recording, the transactions are recorded in general journal by personnel in the general accounting. Moreover, most companies monitor transactions in the investment cycle through a subsidiary ledgers maintained by the Treasury Department. The auditor normally reviews competency of the individual making journal entries and periodic reconciliation of subsidiary and general ledger. So, regardless of the manner of safekeeping, access to these certificates is given to at least 2 hiring officers. We have the president, the treasurer, CEO, COO, CFO, or chairman of the board. This control is sometimes called dual control or joint custody. The auditor normally requests for the conduct of security account in the financial institution holding the client certificates. So we are now to start with the second part of the module.